What's up, everyone? We're back with another video. Jeff Perry here. Today, I am blessed with a moment to talk with an old friend by the name of Wes, who I will let introduce himself right now.
Hey, Jeff, thanks for having me on the show. Founder of Acheron Trading, Singapore and Hong Kong-based market maker.
Love it. I actually didn't know that you were based out of Singapore and Hong Kong. So a lot to talk about here. Wes is an OG in crypto, at least from my standards. We actually go back quite a bit. I first met him through a mobile game called Solstice Arena. It's a MOBA, kind of like League of Legends, and we used to grind that back in the day. I was in, I think, ninth grade. I was just starting high school when we were playing, and I'm not going to lie, in my opinion, we were some of the best players on that game, dude. We created a team, and like that game just has pure nostalgia factor for me. I don't know what you remember from those days, but every moment playing that was so much fun.
Yeah, I remember all of it. It was honestly a great time. It was a small moment where that game really peaked before it got acquired by Zynga, and then they
Yeah,
killed it, which, sucked. But yeah, that was a really good time. We had the guild called Carousel Cowboys, which
exactly.
was very fitting for, young guys running a little gaming guild. And I know you said that you remember us being the best. I mean, we were the top ranked team, and
Literally.
it was definitely good times.
I played a lot of games in my days, and there was some other high level players. I remember Mr. Dang was one of them. But out of all the games we grinded, like I can confidently say, even fully aware of my ego here, is like we were amazing at that game. So enough on the video games. Let's move on to what's important here, and let's just first start off by having you go over a little bit about how you got into cryptocurrency. When was it? Why? And how did that progress?
Yeah, so it was kind of the time when, we were big into Solstice Arena back in the day. I was finishing, my master's in accounting at Florida Atlantic University. I was also a teaching assistant at the time to cover my tuition. And I was sitting in my TA office one day. It was like two offices. We'd have office hours. And one of my colleagues was screaming at his computer screen. And I was like, hey, man, like, what are you looking at? And he's like, oh, it's Bitcoin. And that was during kind of the run up, back in late 2013. It was like a major rally in Bitcoin, before it crossed over 1,000 for the first time, and then subsequently collapsed following Mount Gox going under, the biggest exchange at the time. And anyway, I it caught my eye, and I looked into it, and I had just finished an internship with PricewaterhouseCoopers in
Interesting.
Tyson's Corner, Virginia, at Freddie Mac. And basically, I spent 3 months of my life calling banks to confirm that they held certain loans that the company said that they did. And after I stumbled across Bitcoin in that office, I started looking into it more, and I was like, "Whoa, this technology could potentially like make everything I just spent my whole summer doing redundant. Like if all of this is publicly verifiable, like mortgages and everything like that are just a great use case for blockchain in general."
Sure.
And I was like, well, if everything I just did could be automated and done actually with a higher degree of certainty through blockchain, what else in my future career could be, automated and turned into a technology solution that, could actually be done better than a human? And that's what, made me really look into it more. And my entry point was as a miner. So I learned that you could actually participate in the minting of new Bitcoin by running a mining rig. And in fact, a mining rig was nothing more than a gaming computer with a few extra, graphics cards
Yeah.
strapped onto it. And I was like, well, I can do that. And it looks like my whole future career could be, in jeopardy by this technology. So I used some of my student loan money at the time, which I found was, I mean, student loans are for education, right? And
Yeah.
so I was like, well, I'm going to spend, $2,500 of my student loans. And I'm going to learn about this technology that could be disruptive to my career in the future. And that was, really my entry point and where I started, getting hands on and more interested.
I love it. Aping the tuition, the student loans into mining. That's amazing. And hey, I would say it clearly was a good decision looking back. So you first set up a mining rig before you ever bought a single or any Satoshis or anything like that?
Yep. That was my entry point. And really, like, it was at that time where ASICs were becoming, a big thing. Basically, like, where GPU mining was no longer the best way to actually participate.
Right.
And but so I felt, even back then, I felt like I was kind of late to the party by starting mining, but I looked at it as a way to really learn about the technology and get hands-on. For me, I'm a hands-on learner. And so
Me
that
too.
was, just the right opportunity for me.
Yeah, I love it. So was that still within 2013? Was it 2014? And then when did things progress from there? Because if I remember correctly, when we were playing Solstice Arena, I want to say you had some sort of website I saw at some point that was offering accounting services and you were accepting payment in Bitcoin, or was there anything to do with that, or am I misremembering?
Um, I can't remember if I can't remember, that in particular, but I did start blogging about, the different things that I was doing in Bitcoin. And, one of those, so I started mining, that was late 2013.
Okay.
And then, um, a few years later in 2016, I recall what you're talking about. I had a friend that was working on a project, and I helped him, accept, Bitcoin for that project.
Okay.
And then second, I built a portfolio manager for Bittrex. This is like 2014,
Nice.
and it would, query the Bittrex API for all of your trades on your account, and it would drop those into a Google spreadsheet that which would then calculate, your portfolio and allow you to kind of keep track of your positions. And that's something that, there's tons of software today that you can do that, but there was
Back
nothing for
then,
that back then.
I'm sure.
Um, and then I started selling that software, and you could buy that software in Bitcoin.
That's cool. So this was a individual project. You didn't actually have any contract with Bittrex or anything. This is just something that you built and then began selling, correct?
Yeah, that's right.
Nice. That's cool. So fast forward 2016, things are progressing along. What was your next business venture? Had you already started dollar cost averaging or investing your own money into Bitcoin at this point, or what was the path there going forward?
No, I mean, I didn't really have any money, so I wasn't like investing in Bitcoin with anything material. I mean, I was like accumulating, just like in any means possible, just having some small exposure. And then in late 2016, Prime Minister Modi of India demonetized the 500 and 1,000 rupee notes, which, is kind of like the equivalent of, if the government were to say, hey, like, the dollar bill and $5 bill, just as an example, are like no longer in existence, and you need to
Right.
turn them in and pay taxes on them. And
Wow.
that event, at the time, Bitcoin wasn't really doing anything, but in terms of movement, it was a pretty quiet time of the market. And then the price for Bitcoin versus rupees spiked 35% and higher on the India, local exchanges. And as a way to, because they were buying it at a premium to not have to turn in their notes and pay
Right.
taxes on them. And so I saw that, and I was really fascinated because that arbitrage opportunity, where there was this huge premium, was just sitting there. And I was like, this is very weird. You would think that that would be very temporary, like in an orderly and efficient market, but it was just sitting there. So I took what, meager Bitcoin I had at the time that I had kind of scraped together,
Yeah.
over the past few years, and I sent it all to this local Indian exchange, and I sold it for rupees. And I couldn't open a bank account in India. I tried,
Yeah.
but I was just it was like a young guy, and with no connections, and so I just sat on that position until the market eventually, came back to parity, 30 days or something later, and then I sold, the INR back to Bitcoin, and then withdrew the Bitcoin, and collected that premium, back to
Nice.
my account. And that really opened my eyes that I had just spent all this time in college, learning about efficient markets and everything like this. And I realized that, markets can be a lot more inefficient than you think, especially in emerging assets like Bitcoin and other cryptocurrencies.
Sure.
And so that got me really fascinated with the trading aspect of the market.
It is super cool. And what I've noticed is I've listened to a lot of podcasts and interviews of guys who have like become really wealthy through cryptocurrency. And a lot of them I've heard is a common theme is they found some sort of arbitrage, where there was something like that, whether it's the whole Sam Bankman-Fried thing, arbitraging through a Korean exchange, I want to say it was, or someone who had spoken about arbitraging XRP and XLM. Whenever XRP would pump back in the day, he said he would just buy XLM and it would shortly follow after. So it's super interesting, especially these days, that there are still big arbitrage opportunities, even with how advanced the market's getting with automated market makers, which again, I'm looking to learn more about. And so maybe I'm speaking to a degree of naivete there. But even like, for example, let's talk real quick about the Slurf meme coin that dropped last night. There was still an arbitrage opportunity there. I was buying it on chain through like Photon or just swapping through Radium. And then right after it was listed on MEXC or MEXC, I was basically sending it there because there was just a premium on the bid and the ask. And so I was just buying it there. And I think about 3 times and again, the order book's not crazy thick. It's not like you could arbitrage with huge 6-figure amounts, but it was still something.
Yeah.
And even just those little opportunities, being able to like peek behind the veil and kind of like pull something off like that, I think is like super interesting. So I love how the space is full of opportunities like that. And then, so I guess let's move forward and progress. How did you get into your next business or this current business that you're with? You can explain a bit about it and how it all works.
Yeah, just before we do
Sure.
comment on what you just mentioned, I think that's a really awesome edge that you uncovered.
Right.
And something that's really unique to crypto is that you mentioned that you couldn't, execute large size on that trade. I think something that's really distinct to crypto is that, the small guy actually has the edge over the
Exactly.
institution for the first time ever. And, you don't even need a brokerage account, right? Like you
Right.
probably just used an email and
An
signed up
email.
on MEXC,
So
and then
cool.
you had, an on-chain wallet that you were trading through the DEX on. And, that's like a key takeaway, I think, for anyone that's new to this. The barrier to entry is literally very, very, very low. It's mainly just, building conviction in the asset class, and
Yeah,
then, being willing to go through a steep learning curve,
for
to
sure.
build an edge and identify opportunity.
Yeah, because I try to tell all my peers all the time, it's like, guys, please try to educate yourself. Look into this tech. And again, you were telling me, I'll put up a screenshot right now. I was just looking through our DMs. I think in 2019, I was just starting to post some stuff about like investing in stocks, and I was on Robinhood and stuff. And you replied and you're like, bro, just buy Bitcoin and ETH and like chill on it for a few years. And so if you look at the timestamps from there, that was right before the last market cycle. I mean, last bull market. And clearly a good decision. And so it's like and I remember seeing that message, being like, Bitcoin, like my brothers kind of talked about it a little bit, like I don't know, it's probably just whatever, right? And then now I have that same sense of urgency, and it's like I'm just trying to tell all my peers, like, look into this. For the first time ever, you can literally create an on-chain wallet and trade an asset completely permissionlessly, and like there's just so many, you can participate in like fundraising events that were previously completely just isolated to big, accredited investors and stuff like that. And so it just like really gives the small guy a chance at a piece of the pie for the first time ever. And that's what I love. And I completely agree. So let's, I guess, go into your newest venture. I mean, I guess you're gonna have to educate me on how long you've been into all this market making and whatnot.
Yeah. So just to kind of go back on the timeline a bit, I
Yeah.
did go and start my career in traditional finance. I was at PricewaterhouseCoopers, got my CPA and all of that. And then one of my friends at the firm, one of my best friends that I had known for a very long time, he had gone down the track to be a CFA. So between, both of our skill sets, we were in a really good position to kind of, try to take like a fundamental view on cryptocurrency. And so I had, the absolute conviction, even years before that this was going to be huge and disruptive. I just didn't have the means or really the idea of how I could jump in. And then, my friend David and I, we decided to start writing research on how to apply traditional valuation techniques to digital assets. And that gave us, that kind of coupled with the just the conviction that this asset class was going somewhere, that gave us kind of a fundamental view on, when were things kind of grossly undervalued or grossly, overvalued. And that let us think about kind of the timing in which we could make a move and hopefully make a move that wasn't going to be in a recessionary cycle. And we would kind of be picked up and find opportunities in a growth cycle. And so, we left the firm together and we were writing research. We landed kind of an opportunity to get in on a new hedge fund that was being spun up called Enigma Capital. So we started contributing there. I was made the head of trading because I had, the most experience. I don't think they, would have made me the head of trading now. I mean, certainly there's people that, studied to become, traders and had a lot more experience. But at the time, I was the best, suited for the job. And at the time, this is like 2017 era, we were investing in, new cryptos that were coming to market. So we were investing in them before they were, would go public and would list on exchanges. And so I was the one at the desk logged in to exchanges when these assets would go from private to public market trading. And that's where I noticed a recurring theme where there wouldn't be any systematic liquidity in these assets when they went public. And so there was a lot of volatility. There was like totally empty order books. And, just to give you an example, if you were to log into Binance.com or Coinbase.com and you were to click over it and look at the order book for something like Bitcoin or Ethereum, you're going to see that order book is full of a lot of orders on both the buy side and the sell side at any given price, right? The price can move wherever it wants and you're still going to see a lot of orders. Those are provided by market makers in general. Most of the depth is going to be by competing market makers. But then if you look at some of the emerging assets, they also need liquidity. And what I noticed is that there was an absolute lack of liquidity in these assets. And that's what gave me, that's just something that would never happen in traditional finance. And so that's really where the opportunity presented itself, where I recognized like, hey, there's a pretty big void in a like very critical component for these assets to thrive. And that's when I, inevitably started, Acheron as a side project, and then ended up leaving the fund to focus on it full time. That was in Q1 of 2018. I started
Nice.
it in Malta, and then ended up moving the company to Singapore and then expanding to Hong Kong.
Beautiful. And so what has the progression been since you first started? Were there any large mistakes that you made or big learning lessons? And what are some of the best decisions you made that have kind of paid off? And maybe there were risks you took or anything that just stands out that defined you and the company as it is today. Anything you can share?
Yeah, I think, from an entrepreneurship standpoint, um, it doesn't really matter if you're starting like a lawn care company or if you're starting, an international technology company. There's going to be significant challenges, and no matter what you do, people think of entrepreneurship and they see like guys on YouTube, like with their phones out, like just kind of like, typing messages on their phones and like money is just pouring in. And really, entrepreneurship, regardless of the business you have, will push you to your absolute limit. It will push you to your breaking point where, you just want to give up. And so I think having conviction in the idea that I had, knowing that this was going to be successful if I did not quit, and being able to like anchor to that over the course of years with no validation at all is something that you just kind of have to be ready for, regardless of what path you choose as an entrepreneur. And so I think having the passion and conviction in whatever you're going to follow is really like a prerequisite, or you should just continue doing your normal job.
Right.
So
Fair. And so
that's one of the biggest takeaways.
yeah, I love it. And I think conviction is absolutely key. And I think that the more I spent time researching and studying and understanding the technology as a whole, how financial like market cycles work and whatnot, not even saying I'm an expert, but just the information I was bringing in, I was able to cultivate this diehard conviction to where I was like, another bull market cycle is coming. And I'm saying this is over the past, 12 months during the bear market bottom. And like FTX collapsing, Bitcoin hitting 16K, it was only that happening. All that was on my mind was I need to get as much as possible. I had this diehard conviction. Like I don't think I've had as strong a conviction about anything else in my life, that I was like, another bull market is coming. How can I just get and accumulate as much as possible? And so far it's turned out so well. And so I guess my question to you is, I think a lot of the guys maybe that are following me in my Discord and stuff, just starting getting new to cryptocurrency, they don't really have that conviction. So are there any tips you could give, or how did you cultivate the conviction? Because I think once you have that diehard conviction, then all it comes down to is just taking action. And if you have a strong enough conviction, you're going to force yourself to accumulate one way or another,
Yeah. Well, I think you guys, I'm not going to say that you guys have it easy now, because, in fact, when I first got interested in crypto, I had to start with the fundamentals, because, there was basically one asset to learn and understand, right? And now, all this time, I mean, like over a decade later, it hasn't gotten easier. It's actually gotten more complicated. Now you're talking about like 50 different chains that you could potentially be like interacting across. And so like what I would say is start with the basics, start with building an understanding of Bitcoin and blockchain as a technology. So I used to tell people to watch the documentary on Amazon Prime called The Rise and Rise of Bitcoin. And that's just like, it's an older one, but it's like a really good primer. And then I would say, okay, once you've done that, go watch Andreas Antonopoulos and watch some of his lectures on Bitcoin. Read his book, Mastering Bitcoin. And I was looking up to see it right now. It's on my bookshelf. And then there's tons of other books as well. You've got the Bitcoin Standard. That's another good one. I think, once you kind of get bought into the fundamentals, like don't try to jump straight into like, Solana like cross-chain meme coin. You know what I
Yeah.
mean? And try to build some fundamental thesis around that. Like start with like the technology as a whole. And once you're understanding, you're bought into that, and you have conviction in the asset class, it's then easier to kind of drill down and look deeper and find an area to specialize in and find an edge. So that's what I would say. And the biggest value there, on top of just being able to like filter down and build some kind of specialized lens on different assets, is that if you do end up getting exposure to one of these assets, you won't be paper hands. Like you won't
Yeah,
have no
exactly.
conviction and just fumble a big opportunity. Like if you have conviction in something, you've studied it, and you wait patiently for the right opportunity to arise, and then you gain exposure to it. You're going to be way less likely to fumble that opportunity, and than you would if you didn't understand it. Like I'm not going to go out and cherry pick stocks because I haven't been studying them, and if they drop 10% the next day, I'm going to be anxious about that,
Right.
right?
Yeah.
But I leave that to the professionals to manage that. But when it comes to like crypto, if Bitcoin drops 10%, I feel absolutely nothing. It
Yeah.
doesn't do anything for me.
Right.
And I think that gives you the ability to put your emotions aside and really objectively plan out, what you're trying to do. And that can be a big strength.
Love it. Yeah. I think that's huge, especially for the younger guys and newer guys to hear. So, and I totally agree. I see where it can be a lot. It's like there's a polarity between it being easier than ever and more difficult than ever, because right now we have access to more information than ever. Anything you want to learn is online.
Yeah.
There's all kinds of high level books that you can order and read and whatnot. And then in the same light, there's so much stimulus overload, information overload, that you don't know where to look. Oh, Solana, Avalanche, all these other chains. It's like, what's going on? I don't even understand Bitcoin to begin with. So I totally agree that understanding Bitcoin and blockchain to begin with is key, especially for the newer guys. So I guess how did your whole market making and Acheron trading, first of all, is Acheron solely for market making? Do you guys have an investment, like a hedge fund portfolio that you manage and trade with, or is it simply providing liquidity for certain digital assets?
Yeah, so it's actually Acheron. It's named
Acheron,
after
sorry.
the French warship in the movie Master and Commander.
Love it. Cool.
So I'm sure, like, if you have some like nerdy people in your audience,
They'll catch it.
they'll get the reference.
I'm sure.
But yeah, we're purely a market maker. I would say we specialize in new issuances. So just like if a security were going to go through the process of an IPO, they're ultimately, the company is ultimately going to engage with an investment bank, a market maker, an exchange like the NASDAQ or the New York Stock Exchange, and then make that asset available for public market trading. It's very similar in terms of the dynamic in digital assets. So we as a market maker are going to work with new projects that are coming to market and exchanges that they're going to be making their asset available for public trade on. We're going to source the inventory from the project directly and then place that in a systematic way on the target exchanges, so that the end users, whether they're speculating in the asset, whether they're buying the asset to stake it in the protocol, or whatever they might be doing, they're able to access that asset without having a high degree of slippage. Meaning, if
Right.
you see the asset and it's available and the price is $1 on the exchange, and you go to buy, let's say you go to buy one token, you don't want to be paying $1.50 for that, right? Because the liquidity is so thin. You want to pay as close to $1 as possible to use it for whatever you might be trying to do. And that's really the role that market makers play. And they play that role from the very beginning. So the second that asset's available on public exchanges, And throughout the life cycle of that asset, market makers are always there. And market makers like us that are working directly with the projects and the exchanges, we're kind of that foundational layer for the market to operate effectively. And then that allows, other people to come in and, place, they don't just have to place a market order. You can place a limit order, right? But you're not placing a limit order in this void. There's always someone else there
Right.
alongside of you. And that's typically market makers.
Very cool. So when you're working with projects, you're obviously taking, like you said, an allocation of, say, their tokens or coin, whatever it is, and then you obviously, maybe you're posting it up on like a USDT pair, right? So you're also providing those Tether, those stablecoin tokens. Is there any protocol in terms of, I guess, how you provide the liquidity and like, I guess, there's like certain questions I'm not even sure how to ask yet, I guess, but it's like, is there a software that you use that basically dictates the bid and the ask, and there's like automation to it, obviously? So can you go into that whatsoever? How does that work? How do you provide the liquidity? And like, there's obviously an automation to it, but is there software that you use? Are the wallets that you use, are you directly controlling the wallets on the exchange, for example?
Yeah, so market makers should be operating out of their own corporate accounts on exchanges. That's good business practice, and then from there, market makers in general are fully automated to a large degree. So you're providing systematic liquidity at any price at all times. So you have to have the ability, if you've got, let's say you have an order book, you have orders to buy, orders to sell. Someone comes and buys one of your orders, you need to be able to refresh at a higher price, right? And vice versa. So that's basically, it's a systematic solution. And then obviously there's a large risk management component there as well, to be able to, have enough inventory to go through, a lot of volatility.
Right.
These are hyper volatile assets, particularly, close to their launch. So that's something that you have to be prepared for and be able to execute.
Got it. Love it. So what are the risks in terms of volatility, right? Because if you're taking a big stake in tokens and you're providing liquidity to the order books, and say, I guess, how much risk is on the market maker's side when, let's say a big FUD event comes out about a new coin that has just kind of launched, and all the new buyers and maybe even pre-sale holders start dumping their tokens and everything? What's the risk of the market maker?
Yeah, I mean, there's always a risk that a market maker can get blown out, just like any other trader. If a market maker isn't managing their inventory well, which is something that can happen in crypto. I mean, you saw Alameda had a multi-billion-dollar hole in their balance sheet,
Yeah.
and collapsed, right? So this is something that happens. I don't know how frequently it happens with new entrants to market making that don't get publicized, like Alameda's collapse. But you have to be really prudent. These assets are very, very volatile. If you're, not ready to, quote across a broad price curve, you could find yourself in a lot of trouble. And you also have to understand, in traditional finance, there's pure, market neutral algorithms that, people operate. And you have to realize, like, the ability to stay market neutral depends on having other orders in the market to trade against. And in the
Sure.
case of crypto and new assets, you could find yourself being a very large percentage of the liquidity in that market. And so it's really up to you to be able to have that tolerance to quote through, what could be like a totally unidirectional price move. Like the asset could trade, 10x in one day, right? And you have to be able to manage that and continue to provide liquidity. And I think a lot of market makers are way too aggressive. Same thing with traders. A discretionary trader can be way too aggressive, and they can think because an asset, has gone up, 5x that, hey, I better sell everything. There's no way it can go higher. And they're really underestimating the volatility in
Right.
the asset that they're trading in. And that can be a huge mistake.
Totally. Love it. Couldn't agree more. So in terms of revenue generation as a market maker, when you're working with projects and new launches, are you generating revenue from them that they're paying you directly to provide the liquidity? And then I'm assuming maybe your market makers generally are also generating some revenue off the spread of the bid and their ask that they're providing. Is this correct?
Yeah, there's a lot of ways that market makers can be compensated. In general, market makers are receiving a carve out of the liquid supply that they're going to use for providing liquidity in the market. And so, how that liquid supply, whether that's like a loan with an option series attached to it, or whether it's, a managed account that the project is kind of allocated to the market maker to manage, and the market maker is being compensated as a service provider or, an asset manager. There's different ways of structuring, and there's a lot of different, there's a lot of different ways that are actually in practice today. I think, the key takeaway is that, if you're reviewing a project's token economics, for example, you'll notice there's typically, if they're disclosing things well, there's typically a category called liquidity provision.
Right.
And that category is typically carved up. If I were to hyper generalize it, if you had 5% of your total token supply allocated to liquidity provision, 2.5 of that might be allocated towards a DEX pool, and 2.5 of that might be allocated towards centralized exchanges, via market makers. And that's one way to kind of view that portion of the supply and understand its intended purpose.
Very cool. Awesome answer. Explains it perfectly. Love it. So, I guess one of the last questions is really just for someone wanting to get into what you do, what is some advice you could give them, right? If they're very interested in this space.
Well, fortunately, if they're interested in market making, luckily market making in crypto has basically, almost negligible barriers to entry. You can technically be a market maker by supplying two-sided liquidity on Uniswap or, Radium or Orca, etc. So, this is like a very naive, but it is a way to participate in being a market maker. There's also a lot of open source software available out there on the market. So Hummingbot is a platform, you can download a command line interface, you can connect, your MEXC account, and you could, run a different series, different strategies, on your own. And, even us, we do license our software to other, smaller, market making institutions. And, so there's really no barriers to entry, which is very, very unique for something that, if you were to try to start a market maker in traditional finance, I can't even begin to estimate how much that would cost you. So, my advice would be to, just look at your resources out there and start experimenting. And there's not really any barriers.
Love it. That's kind of what we touched on in the beginning is like, and it's one of the components I love is like for the first time ever, this is kind of what I touched on, but I was kind of more talking about ICOs and pre-sales and stuff. And in TradFi, you have to be an accredited investor. But for the first time ever also is like, you can provide liquidity on a DEX, a decentralized exchange, as much as just a few dollars, and you can earn yield on that. That's that is new, and that's just an amazing opportunity for the smaller guys in the space, which I love. The other thing you mentioned was, using something like, I think you called it Hummingbot. I've never heard of that, but you're essentially saying an average retail investor could essentially start using some of this software and, market making to one degree or another on a centralized exchange like MEXC. Is that correct?
Yeah, I don't think, an average retail investor probably isn't going to have a good return profile trying to be a market maker.
Sure.
I would say that, someone that is interested in building a career in market making can get access to tools to start experimenting and learning. And that's really, where I would look at it. And I think really that's the best approach. Like, I don't think any if you're probably better off just trading like discretionarily than trying to be a market maker if you're just looking for the highest return.
Sure.
But that being said, there are a lot of tools out there which are not available in traditional financial markets.
Very cool. Well, I think that about sums it up. I mean, maybe we should get into the last little DGen hour portion of the show. Is there any, would you be willing to quote any potential price predictions you have for Bitcoin, Ethereum this market cycle? I know making price predictions can kind of be questionable, but based off the information that you have, is there anything that you would be willing to speculate upon?
Yeah, I mean, I think, I said this in an interview, not too long ago. I think Bitcoin was at 36,000 at the time. And, this is, I guess, 2 months ago or something like that. And, I said, I believe that it's going much, much higher through the end of the year. And, the reason for that is pretty simple. I mean, the incremental emission is being cut in half, right? And so, that's a big thing, but it's also coupled with the fact that there's been massive net inflows into the spot ETFs. And so, every Bitcoin, the spot ETFs have to maintain Bitcoin one for one. So, every single time someone buys a spot ETF, I mean, there's a corresponding buy of Bitcoin. And so there's going to be, massive net inflows to ETFs through the rest of the year. And, coupled with, a supply sink in Bitcoin, the emission is going down and the notional value of the incremental emission is much lower than the inflows. Right. So that just kind of even in an isolated view, that means more demand for Bitcoin through the year and therefore higher prices. And that's been playing out. And, I don't really see anything, slowing that down. Now, that said, if you buy Bitcoin today, could it be down 15% tomorrow? Yeah, absolutely.
Right.
But if you take a longer view, which, may not be your style, but that's my style. I don't like to be right down to the minute. I like to be right over a longer time horizon.
Sure.
And then I think it's absolutely going higher through the end of the year.
Love it. Me too. And the other thing I was going to say was a thought I've been having recently. I've heard some other large influencers like Chris Crypto mention this, and I guess it's starting to make sense. Is that, do you think that with time, the halving event is going to become less and less substantial for price action because the majority of the supply is already minted? So sure, the emission, and I think, and maybe I'm wrong, right? Because miners and everything have a lot to do with this, but is the price action going to be more dictated on the fact that the new Bitcoin minted, the new emissions are lower, or is it simply the fact of the Bitcoin that's out there and the people that are holding it, what price are they willing to trade it at, right? Because the majority of the supply is already in circulation. What's your take on the significance of the halving, either increasing or decreasing or remaining neutral with time?
Yeah, it's a good question. And I think if you take a step back to kind of the fundamentals of Bitcoin and compare it to, traditional fiat currencies, there's an actual cost basis assigned for any incremental emission in Bitcoin. So, miners had to buy expensive hardware, just like you would, mining for gold. You'd have to have a tractor or dynamite or whatever, I don't know. And and then you'd actually have to and then you actually have to spend electricity, which is a true economic cost, to then run that hardware to participate in the minting of new Bitcoin. And that's totally different from, a central banker just pushing the print button and minting, more dollars.
Right.
And so I think, you know, like underpinning all the Bitcoin that has been mined up until this point is a true like economic cost. And I think that's really important, just to having a sense that that this asset doesn't just trade at this price for no reason. There's actual like an economic sunk cost that can never be taken back out that was used to produce it. And now, what does that mean going forward once, miner, like the emission to miners starts decreasing? Well, one, the you don't need the same incremental emission. Given the price has gone up, it's still, the price has gone up, kind of, has been correlated. So their emission is going down, but the price is going up. But eventually, there will be no more Bitcoin minted. But so you really have no pressure at that point. But what you do have is you have kind of this industrialization of Bitcoin as an asset class. So it becomes normal at some point in the near future to have that as part of your investment portfolio. I think for any
Yeah.
sensible, like sane person, and it becomes the barrier to getting access to it is it is extremely simplified. You don't need to have a Trezor and log into Coinbase and do all
Right.
of this nonsense, right? You just tell your portfolio manager, like, hey, like, here's my risk profile, and a part of that is Bitcoin. Um, and then and then last is you're seeing a lot of different use cases start play out on Bitcoin. So you're seeing things like ordinals
Yep.
happen right now, which are driving a lot of transactional revenue. So you can have your revenue denominated in inflationary, new issuances of Bitcoin, or you can have it denominated in transaction fees that get paid to miners for propagating those transactions to the chain. And so I think you start to see a large shift in more activity happening and the compensation coming that way.
Love it. Yeah, and we're already seeing we're already seeing large institutions start to pitch, hey, maybe you should have a few percent in Bitcoin here. And I think that's only going to grow as time goes on, as adoption goes up. And that was interesting that, I've heard Michael Saylor recently talking a lot about how the transaction fees are going to essentially become the new revenue for miners and whatnot. So that's really interesting too. Brother, thank you so much for coming on. I learned a lot. I'm sure the viewers did as well. And I think we're going to have to do this again sometime soon.
Yeah, yeah, likewise. It's good. It's good seeing you after all these years, and
For
I
sure,
wish
man.
you luck in your endeavors in this industry while it's still really fun, and while there's still an edge for the little guy to be had. So,
Right.
good luck and have fun.
Thank you, brother. Love it. Peace
All
out.
right, peace.
We'll talk soon.